Hello everyone, and welcome back to episode 2 on Node TV. In this episode we're going to be covering off things like we're going to look at ransomware, we're going to look at social engineering, and we're going to look at the differences between different e-commerce platforms, all talking around how that affects insurance, and hopefully we can use some of this when you can use some of this when you're speaking to some of your clients who are already doing this or who you think may have an exposure to it. So let's get into it. Alright everyone, so as mentioned in the intro, we're going to look at ransomware, and I think when talking to you all and thinking about it in an insurance conversation, I don't want to go too much into the security side of things. We can if we need to, but I think that takes a lot longer, and I think it moves away from what you and the purpose of this blog really. What we want to do is we want to give you the tools and the information that gives you enough power that you feel confident when you speak to your as a retail broker, when you're speaking to the insureds, that you can go through this risk, you can highlight it to them, and hopefully it resonates with them, and you can hopefully make a bit more of a sale, or certainly get them a bit more engaged in a cyber type insurance solution. So what I've done is I want to take it straight back. So ransomware. So I looked through some of our wordings, and I think one of the clearest definitions I printed off was, so what is ransomware? So ransomware is a type of malicious software designed to block access to computer systems until a sum of money is paid. It's that simple. And initially, when I first came across ransomware, probably more than 5 years ago, it was aimed more at individuals. So it would come through in the same way it would come through some sort of Hotmail, if you remember that, or like just a low end, very personalized email, and it would encrypt all your files on your desktop. Now, that's gone one step further as businesses have started to use the internet. That now through the same method, though, this is the most scary thing. So any business that you deal with, that you speak to, that has email, has the ability to be attacked through ransomware. Now, there's many different forms of ransomware as like a developed system, like names for the different ransomware. But I think if we were to take something like CryptoLocker, it's a very common one. I think about 95% of all ransomware attacks come in through that side through that particular malware, and it comes in via email. It's one click. Now, if you take if you look at one of your insureds, if you think less about their cyber risk and more about how many points or how many desktop they have, how many people within that organization have access to email, just one simple click, one click on a spam email could result in the whole of their files being encrypted and they not being able to operate. And there's two real main kind of effects. One is downtime. So you imagine, just take one of your insurers that all use email and use files and access files on a day-to-day basis. The second this happens, one, they can't operate, and two, the ransomware now needs to be settled, and the ransom goes up on a day-by-day basis, on an hour-by-hour basis sometimes, which means that you one, have to have a recovery plan, two, know what you're doing, and three, probably have access to services and information that can help you get around this. So I would say this has probably been, the biggest growing risk that we've seen in 16, I would say, and I think it's one that can really be mitigated against in a combination of the right backup procedure and also a good cyber insurance policy that has elements of cyber extortion attached to it, so you can really have the right people who can come in and assist you manage this situation, because there's really two ways of managing it, and one is paying the ransom. And the problem with by paying the ransom is quite often that and actually the statistics that we had in a recent report, I think it was in some cases, even though the ransom's been paid, that they don't actually unencrypt your data, and therefore you're either going to pay more money or you're in even more of a mess. So the simplest answer is have very good backup procedures, so you can reinstate the data, you can clean the servers and you start again, and also look towards your cyber insurance policy to see how it can help you, provide you with services, and also maybe data restoration costs if you lose any data in the process. Alright guys, now it's time to look at our next point, which is around social engineering. Another massive growth area and activity that we've seen in 16. I think after ransomware, or even alongside ransomware, I think it's just been the biggest place where we've seen the most claims after probably breach. I think that it affects every business that does online banking, which is probably most of the businesses that we see. And I think it's a very old style hack. I think it's just one of those. I think there's been social engineering, which is that has been around for a long time, and I think all it's done is kind of gone full circle as the digital age has evolved and businesses have moved to transacting business in the digital era. It's simply followed. So I don't think we're looking at a particularly new risk. I think we're looking at a new, along with new activities, I think the risks have slightly altered. So I think like most things, I tend to look at the definition as a starting point, and then I think that helps really break down what it is. Then we'll look at kind of like, I think, how it takes place, and then two, where it sort of sits in an insurance policy. And I guarantee that if you're not discussing it with your clients, they will probably bring it up with you, because they're gonna. I don't think there's many people you speak to now who don't. It's either heard about it in the news, or the bank even reaches out to people now. That's how big of a problem this is. So, as a definition, or as our definition, social engineering is an attack vector that relies heavily on human interaction and often or usually involves tricking people into breaking normal security procedures. And I actually started to look at the different types of methods of social engineering, and there are absolutely tons. The ones that we want to really focus on within a cyber policy are probably around fraud, online fraud mainly, e-fraud. So what criminals are typically doing is that they're focusing on target. So it's unlike ransomware, where it's a very scattergun approach. They're focusing on businesses, and they're trying to provoke the business to doing something that usually, and most of the claims that we're seeing, is transfer monies or funds to what they think is someone else's account. Now, the beautiful thing about email is that this is very easy to clone. So the usual story is that they will be emailed by somebody. They might think it's internal, so they might think they're being emailed by the financial director to pay somebody who they are aware that the company already deals with, and of course that's coming from a fraudulent email, and it's coming from a fraudulent invoice with fraudulent bank details on. So the problem here is that when this occurs, the bank often will turn around and say, well, you should have better procedures, and therefore the funds have been transferred. And I can think of probably 10 claims that I've seen where this has happened and it's not been detected straight away. So it's actually happened more than once, which is the most worrying thing. So, and we're talking, there are thousands of pounds here. So I think there's two strands to this. One is looking at areas of cover, whether it's fraud and kind of how that would sit. So the elements that typically that falls under is a crime policy, and up to probably several years ago, this was more of an extension within cyber policies. But I think now that certainly you if you're a retail broker watching this, that I think when you're talking to your carriers or looking at trying to put together a product for your insured, and if they're a business that uses online banking, if you look back to my first video where I was talking about profiling, it's a great conversation to have, and it's a real risk that they certainly face. And typically under the cyber or conventional cyber policy, it would fall under or in around a crime extension, or in many cases it falls under an insuring clause which is headed as a computer crime. And mainly this covers or would look to cover systemic loss coming from a transfer of funds. And just to this point that I just want to finish off on, just how easy is this? It's staggering. So there's open source email now that you could go to within Google. You could search it, you could find it, and you could send very easily an email to anyone in the world with a cloned email address. So I could send, and I can, if you want more information, I can send you more information about this, or join us on one of our internal webinars that we're running for some of the brokers that we support, where we go through some of these examples, and because you don't have to be a genius to make this happen. And I think it's a really growing threat, and it's happening more and more. So you really want to discuss this with your insureds, and hopefully they will see value in this, and you can get some coverage arranged. Alright everyone, let's move into the final topic that I wanted to sort of touch on today in this vlog, and it's to do with e-commerce. Pretty fitting given the time of year. It's 2 days before Christmas. I can only begin to try and imagine just how many payments, or how many payments are going through payment gateways, every second. It's going to be phenomenal. And I read a statistic actually this morning that online sales for 2016 overall are up 24%. So e-commerce isn't going away. It's a massive topic that I probably will do either another video on, I would have thought maybe a full video on, because I think it's probably where I can really break it down for you. And I think when you talk about, I know I mentioned in other videos that I prefer to refer to as digital risk, but I think it's probably where the first need many years ago, the first real desire for cyber insurance came about. And if you sell online, then I think it's of no, or if any of your insureds or clients sell online, I think it's probably quite realistic that they should have cyber insurance. Now, I'm not going to go too much into the very obvious ones, so we could talk about hacking, and we talk about data breaches, and we talk about all the obvious things that you read about, and probably things that you already know and you've heard to death. What I wanted to talk about is how effective you can be when you're talking to your clients and understanding what they do and when they should buy a policy, or at least understanding, if you understand a little bit more about their infrastructure, whether they pose a risk that they should buy cyber insurance for, or whether they, because of their infrastructure, aren't quite yet transitioned fully online, or actually they're all online and therefore it's 100% obvious. And I think I like to classify these as kind of 3 types of individuals, or 3 types of businesses, should I say. And the first type, I would say, is the people that kind of operate in isolation. So these are the people often working as affiliates, so selling other people's products, or utilizing any of you that's ordered through or ever looked at Frugal, which is now Google Shopping, or Amazon, eBay, Shopify. These types of people that either run it as a secondary business. Then for me, I just don't feel they pose a risk where they should or they need cyber insurance. So I think to save everybody time is the fact that because they're leveraging other people's platforms, the point of consumption for the buyer is on those platforms, then unless they're doing something really far out, and you'll probably see that through the size of their turnover and their infrastructure, for me, it's not really worth your time pursuing that. The next type of business that would have an e-commerce website are the type of businesses where they're either small to medium, or they could be part of a very large business but only have a little online sale activity. And those are the businesses who rely mainly on other website developers and designers to build their websites. And critically, they do now start to move into the side where they do have a cyber threat. They would have a benefit from having a cyber policy. And they do start to move into the terms of getting into the realm of whether they are PCI compliant or not, which of course has a massive bearing on how risky you would probably look at them if they were a risk. So basically, if something goes wrong, the sort of implications and the costs of rectifying that, it's kind of like And the way I think about it is their regulatory framework changes when you go from non-storing credit card information to storing credit card information. And then there's if we still focus on the second player, as they're growing, I think it's important that they understand and you understand the differences between them and like the third kind of business that I sort of think about when I'm thinking about e-commerce websites. So the second really uses all third parties. So payment gateways, it has separate merchant account, it has separate hosting, it has separate developers that aren't part of the business, and really it's doing transactions, not huge amounts, but there's no return sales, which means that when they're processing payments, that they never actually see the credit card information. It's encrypted. They don't store any credit card information, but what they do store is customer ID. And for those of you familiar with PII, you'll know that that can certainly link down to as little as an email address. So they certainly should consider looking at a cyber solution, because it can help them invent of all things that come their way, whether that's hacking, various denial of service attacks, vendors failing. But there's certainly the cost of buying a solution is likely to be cheaper than somebody that what I would class as in the third category that we're moving into in a second, where they're doing like huge sales volume, they're PCI compliant, and they're really holding a lot of information, not only ID information but also credit card information. Now, PCI, I think, or to give it its full name, which is PCI DSS, which stands for Payment Card Information Data Security Standards, really has a very broad spectrum. And I think I'll either post a link underneath, or you could look at our website, or we could share with you some blogs where we outline a bit more information. But it really outlines the difference between whether they're self-audited and the sort of different levels that they need to reach within the PCI framework. And I'd certainly recommend anybody who is going to speak to a client about their e-commerce website, or that they insure a business that has e-commerce activities, they certainly spend the time just looking at the PCI framework and looking through the different levels or standards that they have to adhere to. Because what I've found is that from an insurance standpoint is that two things really aren't discussed with the e-commerce websites when they're going through their various tranches of PCI assessments. They certainly, if something goes wrong, the auditors don't mention to them what they have to do. So the second that there's detected that there's a breach, or there's an event, or data has been leaked, then they're no longer PCI compliant, which means for the insured, they can't trade anymore. They have to pause from trading. So you're running straight into a big BI issue. You don't really know what to do. You're going to have to get the forensic investigations in to find exactly what happened. And secondly, for you then to become back online and go back through the PCI auditing process, you have to use an alternative assessor, and that's very, very costly to you and the business. And it's important that when you're looking at not only what their framework is, but also how their insurance would react, is that it outlines not only the fines and penalties that can be put on them for having a breach, but also maybe looking at their assessments and whether they're picked up also within the insuring clauses that live within the PCI framework. Alright everyone, that wraps up our second vlog. Massively difficult to do. I'm finding them slightly easier. I think me and Foxy, who you don't see, who sits behind the camera, I think we're starting to get our systems down a little bit better, and I think hopefully this video will give you, I don't know, some sort of gems that you can work with. And we want to interact with you, so please, if you're in London next year, we're going to go into 2017, we're going to make this bigger, we're going to make it better. We've got some guests that are going to come on and sit with us and talk through some issues. But yeah, if you're traveling and you're coming through London and you're near Lloyd's, we're only sort of 10 minutes away, drop us a line. We'd love to either meet you, or we'd love to bring you onto the show, and it'd be great to hear your take and your sort of journey really on how you're finding cyber insurance and risks that are spinning out. Obviously, sort of everyone's getting more online. So yeah, as I said earlier, it's in one of the episodes, it's 2 days I think before Christmas. So here's a huge Merry Christmas to all of you, and we look forward to speaking with you more in 2017.